Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 18th of May, 2018. Thanks for joining me yet again. Another Friday. We are in the middle of May. Time's flying by so quickly. We're almost into the summer trading season, which appears to have started a little bit if you look at a volatility chart. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is in a risk-off stance this morning. The 10-year note is up 5 ticks. The Bund is up 21 ticks. The bond is up 9 ticks. And the dollar is up 23.5 cents. So clearly risk is off. Very interesting setup in the ES. Remember, the low of Wednesday and Thursday are 27.11, and the low of the overnight session is 27.12. Now we have a double bottom there. One thing to note, crude oil has rolled. Front month is July. The symbol is CLN, as in Nancy, 8. That's the official symbol. Trading 71.47, down 9 cents or 10 cents right now. The laggard today is the NASDAQ, down 30 points, 0.44%. The other indices are down, but relatively small. The S&P is down 4.25 points. The S&P volume so far today, 135,000. Pretty relatively higher than common, well within one standard deviation. Let's take a look at what we've done, what we expected. Here's what we expected yesterday. Expectation is for the market to open at 27.20 and drift up. Looking for a test at 27.32.75. That was accomplished yesterday. However, market could not hold that price. Ended up testing up to 32 yesterday. 27.32 is the high. The stock zone starts at 32, and it just rolled over and tested the low before bouncing up on the close. So this was only a partial. I did not catch the rally. I did stock for the short at 32, but was unable. Just did not have enough to go on in terms of an entry. Secondary scenario is the sell scenario. This did not work out at all. This did not reach. The market reached higher. This looked for a push into the point of control before sellers step in. Here's what actually happened. Let's cut the noise down. This is what actually happened. We opened at 27.19, tested down, looked like it was done, and then very strong rally to 27.32. This rally looked like it was a trending. It was setting up for a trend. It did not have many counter rotations, so there was no way for me to get on that. It's just, I'm going to be honest with you, I just don't have a crystal ball, and there's no way for me to tell that it was going to test this high volume node and then turn around and shoot straight up without any counter rotations. Now, what I saw as the first chance at an entry is right here. We had a local double top on the opening swing high. The expectation would be for it to fall back to 27.17, 27.17 half, and then break this double top. That would give me a chance to get long, to break the double top, and then the target would be the 27.22.75 close and point of control. Would have been sweet for it to pull back. I was stalking long once it pushed through the mid. I know I'm sounding, I'm narrating this, but I do cover this live in at convergenttrading.com and explain why I'm looking at certain things a certain way, what I'm doing about it. So we broke the IB high. Okay, so now we have a normal or normal variation day into 2732. There's a stock zone there. Boom, right there. Okay, and then it falls back into the prior day's range, pulls back to the prior day's high and IB high, and fails through the mid. And then this is news based, I guess, something with Trump and China. And we go neutral. Okay. The next clear opportunity is a retest of mid. So this behaved a lot like a news-based event. It's somewhat of a V bottom. We do have a somewhat of a weak low. It behaved like a V bottom on news, return to the SOC, and the SOC is the scene of the crime. And then we have a mid short setting up. Okay, and so took the mid short, and it just did not do it was just absolutely died after it got to the mid. It absolutely died into the close. It was just sideways and didn't pay out. Lots of risk on that trade without compensation. So I think that trade was good for about 2 ticks, something like that. So that's where we ended up. So the important factors: we opened in range in value, we tested down, we tested out of range, we tested the prior day's high, we broke through, we went neutral, we have a double bottom with the prior day's low now at 27.11. This is very likely to break. A double bottom is a weak low. And we had a pullback to mid, and what I was looking for yesterday, and what I was discussing, is this mid pullback to take out the 27.11 is a relatively high probability, and it just did not do it. It seems like everybody went home right after the mid got touched at 27.2150 or so. So it took about 6 ticks of heat on that trade. Had an opportunity for about, I believe it was 14 or 15 ticks again, but I was looking for it to roll over at least to the IB low, if not to the 27.11 and break through. I don't hold trades overnight, but even if I did, and I was shooting for this 27.11, the overnight high is way up here at 27.27, so I would have been stopped out anyway. So that's the play-by-play for yesterday. Now looking at the overnight, the overnight has pretty good volume, 143,000 now, and it was active from the open. There was a fair amount of news flow from China. China's reporting that the trade delegation offered up a package to reduce U.S. trade deficit by $200 billion annually. That's pretty big news. You get this pop right there. That's about when the news came out, and then there's discussion of different concessions and so on. So we had some pretty good stuff to trade off of in the overnight session, and then late into the session, we start to roll over, and now we have yet again a double distribution overnight profile, just like we had back here, except it's inverted. All right, double distribution overnight profile. And the thing to note about yesterday is how horrible these profiles are every day. I'll bring up my 15-minute to show you, but the market just cannot find fair value. Cannot find a good value for the S&P, and it just keeps exploring and re-exploring and exploring and re-exploring. So that's where we are. We've been selling off. And we do have a multi-distribution overnight profile and pretty good volume. So I'm expecting that the early trade into Friday, into today, is likely to be relatively active. Looking at the 15-minute, let's clean this up. Looking at the 15-minute, if we look at the profiles, you'll note that we have elongated profile, somewhat of a balanced profile, double distribution profile, meaning the market has two places for consensus, a weirdly elongated profile, a weirdly elongated profile, weirdly elongated profile. Yesterday we had a higher high, but a lower point of control, okay, with the same low, 27.11, 27.11. And what this is saying to me, and I explained yesterday that it's just really, the auction is doing what it's got to do, but it's tough to read. I've told you that. I'm not going to sit here and say I'm making millions every day. It's a fact. This is a regime. The market's in the process of switching from one regime to the other. Okay, and so we get a lot of inconsensus, if that word even exists. Just lack of a consensus overall. Exploring prices pretty deeply all the way through. You see volume at price. The volume profile is showing activity throughout the profile. And the only time you have activity throughout the profile is because price is being explored heavily all the way through the range. So there is no balance, and the market's fighting to find that, and we are in the middle of this fight, right? Just like a bunch of sharks tearing up something, a poor cute little dolphin or whatever, and we're just getting rained on with body parts. That's basically the image that I want you to spend your Friday thinking about. I'm just kidding. So that's what we have here. We're caught in the middle of this battle that's raging between buyers and sellers currently. So that's that. Now moving on to what we are expecting for today. Before I do that, I want to remind you it is like Friday. Please take a moment. Please take a moment to hit the like button or find it. I know YouTube requires you to log in. If you do have a Google or Gmail, please log in and hit the like button on this video and any other video that you're participated in. So for this morning coming in, we are at the lower end of the range. Here's where we're opening right now, or where we're trading right now, 27.13.5. It puts us in a kind of a precarious spot on the open, because we do have 15 minutes and this could spill, this could rally. It puts us on the edge. We are out of value in range. So this is a teetering kind of situation here. With overnight inventory short, the expectation is we open, we get a buying response, but the impulse is likely to be down given yesterday's action. So yesterday's action is, if you read the narrative, we gapped down. We had a fairly balanced day on Tuesday. Then we pushed higher. We closed the gap. We returned to Monday's range. And then yesterday, we opened and we took that high out even further. So we went all the way up to this low volume node and 2732 area, key area up here. Okay. Again, that area is a stock zone right up there for a reason. Okay. So that's the part of the narrative. So what we did yesterday is we tested and we found sellers again at 32, and we came all the way back through this day's range. This to me shows that buyers were stepping in, but they could not sustain those prices. They could not hold those prices, so they could not defend their gains. And sellers came in and pushed all the way down to the prior day's low. This puts us into a situation where it's more likely and it's easier for the market to slide lower. So I'm expecting whatever stops are below here to give us a flush and an impulse, pushing us down. And the expectation is for us to push to 27.04 quarter and then go sideways for the rest of the day. So I'm looking for a selling day as the primary idea. That doesn't mean that all day long I'm gonna look for selling, but that's most likely the play. The buying can go all the way up to 27.20 or so. 27.20 being a key high volume node in this area. Remember, we're still trading inside of February, the 2nd of February's composite. So we're in the range that we started February 2nd all the way to the most recent low. So it's balancing. In a bigger picture, it's balancing, but we keep chopping day in, day out. That's this first. That's the first scenario. The second scenario is a small push higher impulse, which gives us a lot more range, and it's likely to bounce around at 27.04, but we're likely to retest this 2700. I'm expecting a break to 26.96 and even beyond potentially with a bounce on the close. Again, strong selling scenario. Okay. The tertiary, the third plan, is an open auction in range that drifts down, tests the 27.11, flushes. Then we get buyers stepping in again as they have here and here. Okay. Buyers step in again, seeing that price is pretty good value, and they start to push, and then it targets 27.20 on the way up. Okay. That's what I have for you for today. Good luck. It is Friday. Don't let the market burn a hole in your pocket, as I always say. Okay. Mind your risk and be patient today. Good luck.